Assalamu'alaikum warahmatullahi wabarakatuh. Hello everyone, we are from Group 10 of Accounting Taxation from International Accounting class. Want to present about the example case of fiscal reconciliation. So first, let me introduce myself and my members. My name is Raihan and my members are Nadhratul Hikmah and Richard Julian Antonio. So there are two contents. First example case and the case solution. So the example case will be explained by me. So PT Sentosa Abadi is a company engaged in the production of household electrical appliances which was established and domiciled in Jakarta. PT SI has been registered as a taxpayer with the taxpayer identification number or NPWP 01.234.567.8-012.0000. PTSA keeps books of accounts using the accrual method in Indonesia and in rupiah. The accounting year starts from January 1st January until December 31st, 2019. Company directors data, Mr. S.A., Commissioner, TIN 06.123.456.1 strip 013.000, and Mr. A.B., President Director, TIN 06.456.123.1 strip 014.000. The shareholders of PTSA include Mr. SA with 50% share ownership and PT AC and Mr. AD each owning 30% and 20% shares. The following is PTSS gain or loss report in 2019. So this is the following of PTSA gains loss report in 2019. Additional information, the company anticipates sales returns using the sales return receipt method. The sales returns that have actually been realized in 2019 amounted to $2,250,000,000 rupiah. So this is the COGS calculation. So the cost of goods sold will be 25 billion rupiah. Next additional information, the company uses the cost of FIFO or net realized value or an NRV method, which is the lowest for the valuation of raw material inventories. So the initial inventory, the acquisition cost is 4.5 billion rupiah and the NRV is 4.75 billion rupiah. And the ending inventory is for the acquisition cost is 4.3 billion rupiah and the NRV are 4.1 billion rupiah. The company's salary and wages including Article 21 income tax are borne by the company in the amount of 425 million rupiah. Based on the calculation of the depreciation cost associated with production, it is known that the fiscal depreciation cost is plus minus 1.9 billion rupiah. Other expenses include the maintenance cost of the shareholder's private vehicle for Mr. SA amounting to 100 million rupiah. The general administrative and sales cost. In the cost of salaries, THR and bonuses, there is Article 21 income tax borne by the company of 55 million rupiah and the salary of household assistant for director of 20 million rupiah. In the cost of employee insurance premiums, there is a shareholder's life insurance fee for 45 million rupiah. And in the case of official travel expenses, which are supported by evidence and related to business activities, it is 75 million rupiah. Then, the cost of electricity includes the cost of electricity for the official residence of the directors are 22.5 million rupiah. In the expense of doubtful accounts, only 30.5 million rupiah is written off on a fiscal basis. The depreciation charge for fixed assets allocated to operating expenses is plus minus 1.2 billion rupiah fiscally. So this is the other cost details. There are 11 costs, and the total of miscellaneous expenses are 225 million rupiah. For the other income or expenses, dividend income from PT-A is reported after being deducted with Article 23 income tax, while from PT-B is not deducted from Article 23 income tax. The profit from the sale of the stock investment comes from the sale transaction through the Indonesian Stock Exchange after being deducted by 0.1% final tax income. The total profit from warehouse sales before final income tax is deducted. Rent income comes from PT Indo Trucks truck rent income after deducting Article 23 income tax. And foreign exchange losses are calculated according to the applicable financial accounting standard in Indonesia. We call it as SAK. The withholding tax on income in China is 9.5 million rupiah, and the tax paid in the Philippines on dividends received from High Electronic Incorporation is 22.5 million rupiah. So the income tax Article 22 on imports collected by the Directorate General of Customs and Excise or DGBC during 29 amounted to 45 million rupiah. Income tax Article 25, which has been paid in January until November 2019, is plus minus 1.3 billion rupiah. In addition, SDP Income Tax Article 25 has been issued by the local KPP on February 10, 2020 for the December 2019 tax period of 135,500,000 rupiah, including fines and interest of 15.5 million, and the amount has been paid by PTSA. So the next is the case solution will be presented by Richard, Julian, Antonio. To Richard, time is yours.
Okay, thank you, Raihan. Next slide. So based on the data before, we can calculate taxable income for the 2019 fiscal year by performing a fiscal reconciliation. From the results of the fiscal reconciliation, it will be known how much income tax is payable for the 2019 fiscal year, whether it will be underpaid or overpaid. In addition, the amount of Article 25 income tax installments for the 2020 tax year can also be calculated. So the following is the complete table of PTSA fiscal reconciliation for the 2019 fiscal year. The use of the sales return allowance method is not permitted, so the related costs should not be deducted from gross income. The amount used is the realized sales return of 2,250,000,000 rupiah, so that a positive corrections of 750 million appears. Article 9, paragraph 1, letter C of the income tax law. Cost of goods sold calculations. Inventories and use of inventories for calculating cost of goods are valued at cost. Fiscally permissible methods are the weighted average or inventory first acquired or FIFO method. The beginning balance of inventories is not corrected for accounting because it is in accordance with cost, while the ending inventory balance must be corrected fiscally because it does not match the cost. The allowed ending inventory balance is 4,300,000,000 rupiah, so that a positive correction of 200 million rupiah appears. Article 10, paragraph 6 of the income tax law. Purchase figures are obtained from the formula purchase equal raw material usage plus ending balance of raw materials minus ending balance of ending raw materials. Article 21 income tax costs are borne by the company in salaries and wages are not allowed to be deducted from gross income, resulting in a corrections of 425 million rupiah. Article 9, paragraph 1, letter H of the income tax law. It is known that the fiscal depreciation expense included in the cost of goods sold is 100 billion 1,968,500,000 rupiah, so that a positive correction of 153 million rupiah appears. Article 6, paragraph 1, letter B, and Article 11 of the Income Tax Law. Mr. SA's personal vehicle maintenance cost of 100 million rupiah in the other cost cannot be deducted because it includes costs incurred for the personal interest of shareholders. Article 9, paragraph 1, letter E of the Income Tax Law. Based on the fiscal correction before, the following is the calculation of the cost of goods sold in fiscal terms. And cost of goods sold is, the fiscal cost of goods sold is 24 billion for 428,500,000 rupiah. Correction of general, administrative, and selling expenses. In the components of salaries, THR and bonuses there are costs that cannot be deducted, namely the cost of Article 2021 income tax borne by the company amounting the amount of both 75 million rupiah must be corrected from operating expenses. Article 9, paragraph 1, letter E and H of the Income Tax Law. The shareholders' life assurance fee of 45 million rupiah cannot be a fiscal expense, so it must be corrected. Article 1, paragraph 1, Article 9, paragraph 1, letter B of the Income Tax Law. Of the total official travel expenses of 425 million rupiah, only 75 million rupiah, which was supported by evidence and related to business activities, resulting in the corrections of 350 million rupiah. Article 6, paragraph 1, letter A of the Income Tax Law. The cost of electricity for the official residence of the directors of 22,500,000 rupiah is corrected because it cannot be deducted from gross income. Article 9, paragraph 1, letter E of the Income Tax Law. Of the total bad debts of 185,500,000 rupiah, only 30,500,000 rupiah was written off on a fiscal basis. In this case, it assumed that it has complied with the provisions of Article 6, paragraph 1, letter H of the Income Tax Law. Fiscally, allowable depreciation expense is 1,250,250,000 rupiah, which is higher than the commercial amount of 680 million rupiah, resulting in corrections of 657,250,000. Article 6, paragraph 1, letter B of and Article 11 of the Income Tax Law. Miscellaneous expense. The cost of gas meals that may be charged as business expenses must meet the requirements, namely a nominative list is made according to the provisions stipulated in the circular letter of the Director General of Taxes, number SE/2027/PG 22/1986. Therefore, the cost of a guest dinner without a nominative list of 32,500,000 rupiah must be corrected. Meanwhile, the cost of entertaining guests with a nominative list doesn't need to be corrected. The cost of donations is essentially non-deductible from gross income. However, there are some donation fees that are allowed. In this case, the Kartini donation fee should not be a cost because it is not used to obtain, collect, and maintain 3 million income of our expenses. Article 6, paragraph 1, letter A of the Income Tax Law. Then, the cost of donations to KONI is allowed fiscally because it includes donation to foster, develop, and coordinate or a combination of branch organization or types of achievements sports submitted through sports coaching institutions. Article 6, paragraph 1, letter M of the Income Tax Law and Government Regulation Number 93, the year 2010. The contribution to employees is in kind is corrected fiscally because it is a gift in kind. Article 9, paragraph 1, letter E of the Income Tax Law. The cost of fines and STP interest must be corrected fiscally because administrative sanctions include interest, fines, and incluses as well as criminal sanctions in the form of fines relating to the implementation of legislations in the field of taxation are not allowed to be cost. Article 9, paragraph 1, letter K of the Income Tax Law. The cost of a child's computer course from the commissioners must also be corrected fiscally. Apart from not being related to 3B cost, this expenditure is also carried out for the personal interest of the taxpayer so that it cannot be a fiscal expense. Article 6, paragraph 1, letter H, and Article 9, paragraph 1, letter I of the Income Tax Law. Office land and building tax costs that doesn't need to be corrected because they are related to the company's 3B costs and tax costs other than PPH can be charged fiscally. Article 6, paragraph 1, letter A of the PPH law. The cost of writing equipment input tax doesn't need to be corrected because it is one of the costs that can be deducted from gross income. Article 6, paragraph 1, letter A of the Income Tax Law. For the input tax on spare parts for employees' shuttle vehicles, there is also no corrections. Decree of the Director General of Taxes number KEP / 220 / PG / 2002. However, for the input tax on spare parts for official sedans, it was corrected by 50% of the total cost. KEP 2020 / 2002. So the following is the calculation of other costs in fiscal terms. The total of miscellaneous expense is 107,200,000 rupiah. Based on the corrections of operating costs before, the following is a recapitulation of the calculation of business costs in fiscal terms. The operating cost and the total operating cost is 9,333,350,000 rupiah. And the next explanation will be explained by Nada.
Other revenue cost correction. Dividend income from PTA, which is reported after being deducted with Article 23 income tax of 59,500,000 rupiah for the purpose of fiscal reconciliation. The amount list should be the amount before the income tax Article 23 is deducted rate of 15%. So the fiscal correction is 10,500,000, which is calculated by the formula 15% multiplied with 59,500,000 rupiah divided with 100% minus 15%. The dividend income from PTB is not deducted from Article 23 income tax because PTA share ownership with PTB is 30%. Included not an object of income according to Article 4, paragraph 3, letter F of the Income Tax Law. For that, the amount of dividend must be corrected fiscally. The profit from the sale of stock investment derived from sales transaction through the IDX is the object of final income tax Article 4, paragraph 2 at a rate of 0.1%, PP number 41 of 1994, STTD PP number 14 of 1997. Income tax deducted by 60,000, 0.1 multiplied with 59,500,000 divided with 100% minus 0.1%, so that the gross income becomes 60,000 which is reported as the object of final income tax in the attachment of the annual corporate income tax return. For profit from warehouse sale, fiscal correction are also made because it is the object of the final PPH Article 4, Paragraph 2, and its implementing regulation PP number 334 of 2016. Next, the amount of truck rental income from PT Indo Truck is known to have been deducted from Article 23 income tax at a rate of 2%, Article 23 of the PPH law. For the purpose of fiscal reconciliation, it is necessary to know the gross amount of the rent before tax. This amount can be calculated by the following formula: 127 and 400 rupiah divided with 100% minus 2%. The result is 130 rupiah, 30 million rupiah. So fiscal correction is 2,600,000 appears. Foreign exchange loss are calculated according to the applicable financial accounting standard or SAK. Foreign exchange losses might be charged in calculating taxable income. So there is no need for correction Article 6, Paragraph 1, letter A of the income tax law. The tax expenses withheld on income in China of 9,500,000 become a fiscal correction because the profit of the factory branch in China, which has included in the commercial books, was only 55 million net after income tax. For this reason, the fiscal conciliation must include in the gross value, which is 64,500,000. Income tax withheld in China can be credited according to the foreign tax credit mechanism in accordance with Article 24 and Article 28 of the income tax accordance with law and its implementing regulation, PMK number 192/PMK 3/2018. Meanwhile, the factory branch loss in Malaysia was 195,500,000. Loss suffered abroad may not be combined in calculating taxable income PMK 192/2018. For the tax paid in the Philippines on dividend received from High Electronic in the amount of 22,500,000, it is an Article 24 income tax credit, which can be calculated with the corporate income tax payable. PTSA Article 24 and Article 28 of the income tax law, as well as PMK number 192 plus PMK 3/2018 for the purpose of fiscal correction. The gross amount of dividend income must be stated, that is, become 87,500. Next. For the calculation of foreign tax credit based on the explanation before, it can be seen in the following table. Next, non-total net income is 10,057,150,000 rupiah. Total income tax payable 2,373,173,125 rupiah. PPH Article 22 import collected by the DGBC during 2019 amounting 45 million become a PPH credit and could be used as a deduction for corporate income tax payable at the end of the year. Like we see with Article 23, PPH on vehicle rental in the amount of 2,600,000 in explanation for letter C, and Article 23 PPH on dividend on 10,500,000 in explanation for letter A, as regulated in Article 28, Paragraph 1, letter B of the income tax law. The total credit for income tax Article 23 is 13,100,000 rupiah. Article 25 income tax that has been self-paid in the amount 1,320,000,000 rupiah divided January until November 2019 tax period, or TOC STP for the December 2019 tax period of 120 million rupiah in principle can be credited in Article 28, Paragraph 1, letter A of the PPH law. Meanwhile, the payment of fines and interest of 15,500,000 rupiah is not an advance for income tax, but only expenses that cannot be deducted in calculating taxable income. Article 9, paragraph 1, letter K of the PPH law. Next. After fiscal conciliation is carried out and the total net income in 2019, the amount of Article 25 income tax installment for the 2020 tax year can be calculated based on available information. Here's the calculation. Next. Based on the calculation before, it can be concluded that the amount of underpaid corporate income tax of PTSA for the 2019 fiscal year is 860,191,875. The installment of income tax Article 25 for the 2020 tax year is 191,039,427 rupiah per month.
Okay, I think that's all from group 10 of accounting taxation. Thank you for your attention. Assalamualaikum warahmatullahi wabarakatuh.